financial abundance. We are in class 3. I hope you're excited. This is one of the most fast-paced classes within this entire course. So we are talking about living a life you love while saving for your future. And this class today about insurance is honestly one of the most important classes you might ever take. Hello, my name is Catherine Van Der Laan. I help people earn more money, save more money, and then know what they can do with the money that they save. I'm excited that you're here, and I'm excited to get into this heavy topic with you today. On page 44 or around there in your workbook, you are going to find a place where you can write down the insurances you need for yourself. There is no workshop today. I want you to go through all of the material today and decide whether it applies to you or not as we go through it. So head on in your workbook to page 44 or wherever it says, what insurance do you need and what is your plan for getting it? Keep your finger in that, and write down what you need as we go through. All right, today we're talking about picking the right insurance for you, how you can set up a financial defense. Now, you might recognize this from the first class, and I referenced it in the second class, whether you decide the direction for your financial life. You decide the direction and then drive down the road that you want to go down. So if you are on Spender Street right now and you are turning around, you've decided to save that $2,500 emergency fund and then pay off your high interest debt, great. You have reversed course on Spender Street. You are on your way to your financial future. Wherever you are, this class about insurance is for you. Don't let life's setbacks destroy your financial progress. This is so important. Everybody has financial setbacks. Everyone gets sick. Your car breaks or you get hit by a car. There are a lot of things out of your control. But one thing that is in your control is the kind of insurance you have and what it protects. Protect your financial abundance, your peace of mind, and your family by getting the right insurance for you. Now, we talk a lot about offensive things, right? We talk about increasing your earnings. Well, not in this class, but I do in others. We talk about budgeting. We talk about tracking your budget. We talk about saving money. We're going to get to that real soon here. We talk about investing. That's in the saving and investing class. Those are great offensive things, right? Money, making sure that you are making money and that you are saving it and you are making your money work for you. That is your offense. Then we talk a little bit about your defense when it comes to money. We've talked about an emergency fund and building a $2,500 emergency fund and then a 4 to 6 month or 6 month emergency fund. Eventually, those are in your steps. Review it in your notebook if you don't remember. We talk about, and we are talking today about insurance. That is a huge defense for your finances. And another one of your defenses is, oh, hey, look at that, more insurance. And insurance, that's another defense that you can have. And insurance, do you see the trend here? One of your biggest financial defenses is getting the right insurance for you. The last defense really is accountability, making sure that somebody else is helping you make the right financial decisions and then keeping you accountable to your decisions. So let's define what insurance really is. Insurance is a basic exchange of risk. So in layman's terms, you pay an insurance company money and the company takes on a financial risk for you. Most people, as soon as I say that, their eyes glaze over. You have no idea what I'm talking about. This is so boring that you could cry and maybe you're falling asleep right now. Wake up. Let's go into some examples. Let's say you pay for insurance. You pay for car insurance. Car insurance pays for your accident after your deductible. We'll get into definitions in a moment. Let's talk about health insurance. Health insurance, you pay for health insurance. And if you have a giant emergency, health insurance pays for your treatment. I remember I had my appendix out when I was around 23 years old, right after I got married, actually. I had my appendix out, and thank God I had insurance. That bill was so high. If I hadn't had insurance, I would have been in the hole. Home insurance. You get home insurance, homeowners insurance, and that pays to replace your home in the event of a catastrophe. You get the idea. Insurance takes on a large risk in your life for a set amount of money. So this is one thing to write down. And there's a lot of definitions in your workbook. I wanted to make sure that you didn't miss that much. There's fewer fill in the blanks and there's more space for you to take notes, okay? So insurance makes sure that one large setback does not destroy your financial progress. Does not destroy your financial progress. Okay, that's a big one. You are trying to make progress. You are trying to do this really well. There are things outside of your control that could destroy your financial progress. If you get the right insurance, then you are mostly protected against any catastrophe that comes your way. So let's get into some insurance classifications. I have a lot of this, the pertinent information written in your workbook here. Liability insurance, you're going to see this everywhere. It's within a lot of different policies. Liability insurance protects you from damages that other people think that you've caused. Okay, so if somebody comes to your house, they slip and fall, hopefully your homeowners, if you're a homeowner, your homeowner's policy has a really good liability insurance because their health insurance is going to sue you because it was your home. And if you have really good homeowners insurance, your homeowners insurance takes care of it. That's liability insurance. Property insurance is all about protecting your property, damages done to your property. So your home, your car. For example, if you had a catastrophe in your home, your property insurance is there to rebuild the part of your home that was damaged due to a catastrophe, like a tree falling on it, it catching fire, whatever it is. It is there to help rebuild your property. We'll get into where that exists later on. Health insurance, this is pretty straightforward, although when you pick a policy, it isn't. Health insurance is currently required by federal law, and it is there to protect individuals from unpredictable healthcare costs. So it also helps you visit your primary care physician because they've found that if you visit your primary care physician a little bit more often, you tend to have fewer emergencies. It tends to cost the insurance company less money. So paying your health insurance premium, a lot of times I hear this a lot, especially from entrepreneurs. They say paying my health insurance premium feels like such a waste of money. I never get sick. I don't need to go to the doctor ever. And then I also meet with people who say, I was an entrepreneur. I didn't get health insurance. I had a heart attack, which nobody can predict. I had appendicitis. I broke my arm. I got into whatever it is. I was in the hospital for a few days, and now I have a $400,000 bill. And I don't know what to do. Can you help me? Guys, get health insurance. Okay. Life insurance. This is another really special thing that we're going to dive into quite a lot today. Life insurance is here not for you if you hold the policy on yourself. It's for the people that you support. It protects your income in the event of someone's death. So it is there to help the people you love live if something really awful were to happen to you. I could tell you some stories I think everyone can imagine if a breadwinner or a caregiver of small children, or if you support your spouse and your family, you all can imagine what would happen if that person were to die suddenly, which I have seen and experienced in my life, without life insurance. Don't let that happen to your family. Get life insurance. We're going to talk about the different kinds later on. Okay, here are all the types of insurance that you could buy. There's automobile insurance, home insurance, renter's insurance, health insurance, life insurance, identity theft insurance, umbrella insurance, long-term disability, short-term disability, accidental death and dismemberment insurance, and so much more. There is a lot. It is confusing. This is why we're going through it today. We're going to focus on 4 different kinds of insurance. It's really 5. But automobile insurance, home and renter's insurance, life insurance, and disability insurance. So that's short-term and long-term. Let's go through a few definitions before we get into all the nitty-gritty and before you get to figure out what you need. Some people don't know the policy is the legal contractual terms and conditions of your insurance. You need to read it because it tells you what it covers and what it doesn't. This is very, very important. So the policy, that's your contract. Okay. What are you signing up for? What insurance are you buying? And if you have a really good insurance broker, that person is going to help you interpret, but I'm also going to break down a few things today. Premium. The premium is the price you pay to hold the policy. That's your bill, guys. That's what you get in the mail. That's the money that you're giving the insurance company. The deductible. That is the amount you pay out of pocket for damages if you need to use your insurance before, and there's your fill in the blank, before your insurance will cover any of that cost. Okay? Sometimes it's $2,000 for like homeowners insurance. That's all negotiable. Your coverage limit. That is the maximum amount paid by the insurance company on a claim or in a coverage period. That's really important. A lot of people will read their policy and skip over the coverage limit section. You need to know the maximum amount that they will pay. That's really important with home insurance. It's important for car insurance. It's important for health insurance. There's a big to-do in like the 90s and the 2000s when health insurance policies had really low coverage limits, and some people were having heart attacks and it went over the coverage limit. So read your policies very carefully, find your coverage limits and negotiate them, figure out what else you can do if they're too low. All right. Now, all of that said, a lot of you are, I'm sure, saying, how do I figure this out? What do I do? I get that. An entrusted insurance broker can help you get the right coverage for your situation. Your situation is different than Bill's situation over there. Your situation is different than Tina's situation. So make sure that you are working with somebody who can help you get the right coverage for your situation. I'm not an insurance broker. I'm just an educator up here on the stage. I'm not going to sell you anything. The only thing I ever sell is education and coaching. So I can't sell you insurance, but I do know that there are some brokers out there who can help you find what is best for you. Okay. Health insurance. That's a type of insurance coverage that pays for medical and surgical expenses that are incurred by the insured. All that means is if you get sick and you go to the doctor, you don't want to be paying a huge bill. You want to pay just your deductible, maybe your out-of-pocket maximum, and nothing more. So go get health insurance if you don't have it. Look over your policies carefully. Okay. Auto insurance. That's all I'm going to say about health insurance. Auto insurance. That covers expenses you could potentially have if you get into a car accident or if something happens to your car outside of an accident. We're going to go into this way in depth. Most state laws obligate a vehicle owner to carry specific kinds of insurance. I know that's true in Massachusetts. That's true in California. That's true almost every place that I've had clients, which is most of the states in the United States at this point. Auto insurance, is a fill in blank, will protect you from some of the most common financial risks today. If you own a car, you are responsible for expenses and liabilities that happen because of that car or to that car. You are responsible. So if that car goes out of park and it rolls down the road and it crashes into a building or a person, you're responsible. Damaging another car, hurting a person, causing property damage, or even killing another person could all happen because of that car. Typical car insurance has three major parts. You have liability insurance. Hey, ding, ding, ding. Does that sound familiar? Yes, it should. You have liability insurance, you have comprehensive insurance, and you have collision insurance. So liability insurance will cover most of, and I say most of because you have a deductible, most of your costs if you're in an accident that you caused. It's very, very important. The liability insurance covers something that you did. Now, liability insurance is designed to help you if you're in a car accident that is deemed your fault by paying for the other person's, this is very important, medical and auto repair costs from the accident. Guys, make sure that you have all of this highlighted, written down so that you can refer to it when you are renewing your premiums, when you're renewing your policy, okay? Basically, if you crash into somebody, the liability insurance will cover their ambulance, their hospital stay, and car repairs that you're responsible for. So this is what a liability premium tends to look like, or policy tends to look like. You have $250, $500, and $250. So when you talk to insurance brokers or insurance agents, they're going to be like, "Hey, liability insurance, you want $250, $500, and $250? Or do you want $300, $600, and $300? Or I've seen this in high cost of living areas, so around Boston, around DC, around San Francisco, definitely in California. Oh my goodness. You have a lot of higher liability premiums. There are other ways to get around this. You can get umbrella insurance, but read about that in your workbook. I don't think we're going to go into that today. I've seen very few people go over this liability limit, but if your net worth is over $300,000, $500,000, if your net worth is pretty high and you have high future earnings, consider getting an umbrella insurance policy, because that is extra liability insurance for both your car and your home, and actually for other people suing you for different reasons. So anyway, so you can browse, negotiate, figure out your auto insurance liability coverage by talking to your insurance agent. Let's move on. Comprehensive coverage will cover the cost of replacing or repairing your car if something not accident related were to happen to your car. Comprehensive coverage, basically, oh, you didn't cause an accident, nobody caused an accident for you, but something happened to your car, like a hailstorm, a tree falling on your car, whatever it is. Comprehensive coverage covers that. Okay? That's all you need to know about comprehensive coverage. Collision coverage will cover the cost of replacing or repairing your car if you're in an accident, regardless of who is at fault. So if somebody else collides into you, causes an accident, it will replace your car. If you cause an accident, it will replace your car. Remember, the first one we went through, liability insurance, replaces the other people's stuff and health and everything. This one replaces your car. One more piece of insurance that I think we should talk about, because this is becoming more and more prevalent around the United States. 1 out of 3 drivers in California, for example, is uninsured. 1 out of 4 in Florida is uninsured. I don't know what it's like in your state, but there are a lot of uninsured and even more underinsured motorists out in the world right now driving cars. So if you are really wanting to cover your own finances and make sure that you are not going to be responsible for somebody else's damage to your car or responsible for any of the costs of a collision, make sure to have uninsured and underinsured motorist protection as part of your auto policy. It covers costs you would have if an uninsured or underinsured driver is responsible for damage. Okay, that's really, really important because if they don't have an auto insurance policy and they're driving and they have no money, they probably don't have that policy because they don't have any money. There's nothing you can get from them. And then you are left holding the bag, and your insurance company is going to say, oh, well, we didn't cover that with our normal policy. Too bad. So make sure to get this. I have it. I don't go without uninsured and underinsured motorist protection. Here's an example. I'm going to leave this up on the screen just for a little bit here and talk over it. I know that this is a lot of text. Here's what I want to communicate to you. If you have not looked at your policy in a long time, please look at your policy and get a few other quotes. This is a real example of one of my clients, and she gave me permission. One of my clients, a few years ago, she had 3 cars. She was getting, her premiums were super high. So this is her annual premium over here on the left. It was $7,200 to insure those 3 cars. Now, those weren't really expensive cars. They weren't nice cars. That's a lot of money. So I was kind of on her about finding a few other quotes. She did. We poured through them. We made sure that she was being protected. She went back and forth with her insurance broker. She asked the right questions. And then she came down in her insurance policy to about $2,250 per year. That is almost a $5,000 per year difference in her insurance policy. That's incredible. Now, she did drop her 26-year-old son from the insurance policy. He didn't need to be there. He had his own insurance. He wasn't driving those cars. So that was a chunk, but I promise you, it was not the full $5,000 per year. She still had 2 other boys who were younger than him on the insurance policy. So we went through all of this and optimized her auto insurance, got her better coverage for way less money. So if saving a lot of money, thousands of dollars every year, does not propel you to get to look at your auto insurance, I don't know what will. So let me give you a few ways that you can save on auto insurance. First, and this is last on the list, but really this is first, go through an insurance broker. Insurance brokers can help you figure out what you need and what you don't need. Now, you're learning about it today. It's pretty complicated. So go through an insurance broker. Another way you can save on your auto insurance, increase your deductible. I do it all the time. An insurance broker will usually say, hey, here's the lowest cost deductible. Here's everything that you need. And here's how much it's going to be. And then I'll go through and say, I have an emergency fund. I am on the steps to financial abundance. I am living this life. I can afford a higher deductible. So how does that change my premium? How does that change my bill? I don't want to pay you all this money. How does it change my bill? And I'll go back and forth. I did it with USAA recently. We went back and forth and figured out a higher deductible, and it changed the premium enough where it was worth it. Okay. Now the third way that you can save on auto insurance is to find special group discounts. So I just mentioned that I use USAA for auto insurance because my family is a military family. I didn't go into the military, but a lot of my family members did. So I was able to get onto USAA. They have a great policy. I don't think that here on the stage I can recommend them. That's just what I use. Your situation is incredibly different, I'm sure. But go find policies. Go use your broker, but also look yourself to find different policies because some of them have special group discounts that others don't have, and you might fit into that group. So go around, figure out what discounts you can get, and get them. All right, let's move on to homeowners insurance. Now, this one can really make or break your financial future. It's super, super important that you get home insurance that is right for you. Home insurance covers expenses you would potentially have if your home, if something unexpected and damaging happens to it. Okay? Now, a lot of people don't like thinking about what that would mean, but let me give you a few examples. Homeowners insurance can protect against fires. You might need an extra policy for that, depending on where you are. It can protect against floods from outside or inside your home. Homeowners insurance can also protect you from natural disasters like tornadoes, hurricanes, a lot of different things. Everyone who owns a home needs homeowners insurance. Everyone. That is often your biggest financial asset, your home, for a long time anyway, until it becomes your retirement accounts. Make sure to protect your home. You never know what's going to happen. Homeowners insurance has 4 types of coverage. You have dwelling, personal property, liability, ding, 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 there it is again, and additional living expenses. Let's just define those really quickly. This is here in your notebook. Make sure to take notes as well. Figure out what you need, okay? So dwelling coverage is the amount of money it would take to rebuild your home on the property it sits on. So a lot of times somebody will get homeowners insurance and they'll say, why isn't this dwelling coverage equal to the amount that I paid for the home? It's because that's not what it covers. It doesn't cover your investment dollars. It doesn't cover your mortgage. It covers the amount of money it would take to rebuild your home. Rebuild your home. A lot of different factors go into it. They're going to ask you a lot of questions. What kind of countertops do you have in your kitchen? Things like that. And then you can rebuild your home with that dwelling coverage if some natural disaster were to happen to it or some disaster. Okay. Personal property. Personal property coverage pays you back for the stuff you lose inside your home. All the stuff, your furniture, your electronics. Sometimes there's special personal property policies for high-priced jewelry, things like that. This pays you back for the stuff you lose inside your home. So dwelling coverage rebuilds your home. Personal property buys all your stuff back for you. Liability coverage pays for the cost of somebody else's injury or death on your property. So a lot of times, if you are applying for home insurance or homeowners insurance, they'll ask you, what kind of dog do you have? If you have a dog, because that increases the premium, the bill on your liability coverage. Additional living expenses. Additional living expenses covers your additional costs of living without a home. Additional costs of living without a home. Let me give you an example. So say something were to happen to your home. This actually happened to a friend's mother recently. Her home burnt down and she couldn't live in the home because it no longer existed. She had to rebuild it using the dwelling coverage. Her personal property was replaced eventually when her house was rebuilt. She had great insurance coverage. She also had this, additional living expenses. It paid for her apartment stay. The additional cost, it didn't pay for her food because she was going to buy the food anyway, but it did pay for her apartment stay because that was extra. That was additional. So get the right coverage for additional living expenses. Saving money. Let's talk about saving money on homeowners insurance. Go through an insurance broker. You're going to hear that a lot. So I'm not going to talk more about that, but please, insurance brokers are great. Increase your deductible. You can also do that on home insurance, almost anywhere. Don't skimp. Guys, don't skimp on your homeowner's insurance. This is one of the biggest risks you have as a homeowner. Keep your investments safe. Let's talk about renter's insurance. It's not a big deal. It's really low cost. Renter's insurance covers all of your stuff. So like that personal property, it's just a personal property if you're a renter. Okay. So it covers all of the stuff you have in your apartment or your house in the event of a catastrophe or break-in. It can also cover displacement costs. So that additional living expenses, it can cover that. That's optional. So your main takeaways on renter's insurance. This is the last slide on this one. So if you are a renter, pay attention. If you are going to be a parent of a renter ever, pay attention. Your main takeaways I thought it's really super cheap. It is $12 to $40 a month. I've never actually seen a policy that is over $36 per month, and those people had a lot of stuff. It covers only personal property and displacement. That's it. That's all it covers. And you should get a minimum of $10,000 of coverage, okay? Because you're going to have to replace your stuff. You tend to have a lot more stuff than you think. I promise almost everybody does. I've been on Zoom calls where they take me around their house, right, on a camera on their computer. They just pick up their laptop and take me all around their house, or maybe I'm on their phone. And they're saying, really, I only have $5,000 worth of stuff, and I'm taking copious notes while we're doing it. Almost everybody has at least $10,000 worth of stuff, including that phone, that computer, your stuff, guys. Come on. Okay. Let's move on and talk about life insurance. Oh, some of you are going to be so mad at me after this. But I'm just going to tell you about facts and figures and numbers. You might know somebody in your life who is trying to sell you life insurance. I know a lot of people who try to sell life insurance and who succeed in selling life insurance. This is a place where you can have a lot of extra costs with not a lot of benefit. Let's talk about the definitions first. Life insurance is financial coverage you buy for your loved ones in the case that you die. Okay? It's not for you, it's for them. And I'll say this, everyone dies. Everyone dies. The only two things guaranteed in life are death and taxes. Everyone dies. If you die while you are covered by life insurance, your family doesn't have to add financial suffering to the emotional toll of losing you. I'm old enough that unfortunately I have had friends die in almost every stage of my life. I have had really close friends die. Some had life insurance and some did not. The ones who had life insurance left their families. God took them. Something terrible happened, right? And their families figured out the financial future for themselves without my friend. One of my friends had her husband die. It was awful, but she was okay financially. I have known many people, and I've counseled many people whose husbands, whose wives, the breadwinner, the caregiver have died early. Nobody was expecting it. It was sudden. It wasn't anything that anyone could predict, and they didn't have life insurance. The people that I counsel who are widows and widowers come to me and say, I've had to change my whole life. I brought up kids. I tried to figure this out and I'm so behind. I don't know what to do. They're trying to survive while they're going through all of this grief. Don't do that to your family. Don't do that. Get the right life insurance that works for your family. Okay. I hope that really spoke to you, because I don't want to go through the awful situations that I have seen people in, that I have counseled people through, that I've coached people through. I don't want to go through those details, imagine them, and then it's worse. Okay. So if you can get life insurance, because they don't accept everybody, if you can get life insurance, do get life insurance, but only the kind that really actually works. So we're going to go into that too. Okay. Life insurance, the whole purpose of life insurance is to replace your income or work in the unexpected event of your death. It's a good idea to get life insurance if your income or work supports someone other than yourself. Okay? income or work. You do not need life insurance if nobody relies on your income or work to live. Okay, you don't need it if nobody's relying on you. Okay, here's how it works. You buy a certain amount of protection, you name your beneficiaries, and if you die, the beneficiaries get that protection. That's it. That's how it works. You should have independent life insurance from your place of work. I cannot stress this enough. You should have independent life insurance from your place of work. So many people change their jobs and lose their life insurance and then don't qualify later. Many people risk losing their life insurance coverage the moment they change their job or lose their job. You can lock in a policy right now that is going to be less than the policy you would get 5-10 years from now. So get independent life insurance. If you get the right kind, it's not expensive. Here's another benchmark. You should get at least 10 times your income. 10 times your income if you are an income earner. Now, if you do more of the childcare or the housework, so I know a lot of stay-at-home moms who say, oh, I don't think I should get life insurance. You should. Then add up how much your work, this is why I say your income or your work, add up how much your work would cost to hire others to cover you. So if you are a stay-at-home parent and you do a lot of the childcare, maybe it's before school, maybe it's after school, or maybe you have young kids and you're a stay-at-home parent, figure out how much a nanny would cost, like round the clock, to replace you. And then use that as your figure for life insurance. So 10 times your annual income or 10 times the cost of your annual work. Okay. There are three major types of life insurance. Term life insurance, the three types are term life insurance, whole life insurance, and universal life insurance. We're going to go into them in depth. Term life insurance is the least expensive. It lasts for a chosen term, so you can actually pick any year, but the standard ones are like 5, 10, 15, 20, 25, 30 years. And it pays out a lump sum at death. Okay, so if I had what did we have? Like a 20-year policy, a 30-year policy, whatever it was. Still going. I'm not that old. This expires after the term is over. And if I were to drop dead all of a sudden, my husband, the beneficiary, would get whatever lump sum we decided on. Now I'm going to give you an example, and this is all in your notebook because I want you to see these numbers. Samantha is 30, and she finds a 30-year term life policy for $49 per month for $1 million because she doesn't shop around or go through a broker. This is like really expensive for a policy like that for a 30-year-old, okay? So at least it is right now. I don't know what it's going to be if you're watching this 10 years from now. Whole life insurance is typically much more expensive, but it holds a cash value and lasts your entire life. That's what really brings people into this. So Whitney over here is 30. So same profile, guys. I ran the numbers. I did this. I wanted you to see how this works. Whitney's 30. She finds a whole life policy for $733 a month. That's a lot of money, but that cash value. And if she dies, it's $1 million policy. So they get a lump sum $1 million if she dies, her beneficiaries. Universal life insurance is divided into guaranteed universal and invested universal. So that could be indexed or variable. We're not going to get into all of those details, but basically it's a term policy and then either a savings account that compiles like a high yield savings or an investment account that tops out and bottoms out. So most people get, if they get universal life insurance, they get indexed universal. Jill over here is 30 years old. So same profile, same risk profile, everything. And she chose the indexed universal life insurance. She finds a $1 million policy. So that term, if she dies within that policy period, her beneficiaries get $1 million. She pays $733 per month and invests it in the S&P 500 index. Okay. Wow. Sounds so good, right? All of that money gets invested. Let's see how these numbers work out. I want you to see these details so that you don't get swept away in some sales gimmick. life insurance. Remember, the point of life insurance, the whole point, remember the purpose, is to help your dependents if you die early. It's not a savings account. It is not an investment account. It is not a way for you to leave your kids an inheritance, and you'll see why in a moment. So let's talk about Samantha, Whitney, and Jill. They're all 30 years old. They have the same risk profile, the same birthdays, same health history, same risk. I ran these numbers myself. None of them smoke or skydive or bungee jump or do anything really terribly dangerous. Here are the numbers. You can't see them. Totally get it. They are in your notebook. Let's get to that bottom line. I want you to see a couple things here. They each got a 30-year term on that 1 million policy. Okay, this is 30 years down. Now with whole life and universal life, it lasts their whole life. So I'm looking at year 30. These ladies are now 60 years old at that 30-year mark. Look at how much the insurance costed them, how much they paid for that insurance. And now look, I have this invested column over here. Samantha, who got that term life for $49 a month, spent about $17,640 for that term life. Her premiums never changed. They never changed. And I calculated how much she would have invested over those 30 years in the market. Okay. Remember the other ladies, Whitney and Jill, they both spent $730 or $33. So if Samantha invested the difference between $733 and $49, she would have invested $246,000 in that investment account, whether it's a retirement account or not, really doesn't matter. That grew. And her balance in her investment account that she owns, nobody else has a claim on that. Nobody at all. At the end of that 30 years is over $1.5 million. And she's just investing the difference. She owns that. Nobody can take that from her. Okay. Whitney, she got whole life insurance. She paid $733 per month for whole life. She paid the insurance company $263,888. Okay. That's her premium. That's what she paid the insurance company over those 30 years. She invested $0 outside of the insurance company because, wow, that premium's high. She feels like she doesn't need to do anything else. And her balance in her whole life, remember that cash value? Her balance ended up being $510,000, just over. That's $1 million difference. $1 million difference between Samantha's investing and Whitney's cash value in her whole life policy. That's how those numbers work out after 30 years. 30 years. Jill, she thought she made a better choice. Universal life. Great, wonderful. It's invested in the S&P 500. So she has part term, part investments in her universal life policy. She thinks this is a great way to give an inheritance to her children when she's older, because life insurance isn't taxed. Great, wonderful. Do you want to actually give them an inheritance, or do you want to just stop the government from taxing you? Because look at this. She paid the same premiums as Whitney, over $260,000 over those 30 years. And what is her balance in her universal life account? I ran these numbers. This is real. I know how much life insurance commissions are and how much the company takes. This is your real number. Her balance was $381,000. Look at this. And then decide for yourself whether you're going to get the low-cost term and invest the difference, or you're going to get whole life or universal life. Do you get the difference? Do you get the difference? I don't want you to get swept up in some salesperson's pitch and think that you are you are not paying taxes, or you are leaving a tax-free inheritance, or you're going to have this cash value account that you can borrow from. Why should you borrow from your own money? Get what you need. Remember the purpose of life insurance and invest the difference. Okay. Let's talk about disability insurance. Changing gears here, disability insurance. Disability insurance is a type of insurance coverage that replaces a portion of your income if you cannot perform your job duties due to a qualified illness or injury. Wow, that is a mouthful. Basically, if you get super hurt and you can't do your job and you can't make an income, disability insurance replaces your income to a level, right? And it needs to be qualified. So there are different kinds. We're going to get into that. Here's one thing you absolutely need to know, and I know this is a lot of information. Wake up if you've fallen asleep, nudge your neighbor. Over 25% of all US adults end up disabled enough to stop work or change work. Over 25%. 1 out of every 4 of you. If you're not disabled now, 1 out of every 4 of you will be disabled enough to stop work or change work. That's a lot of people. Protect yourself financially. Remember, you don't want a disaster to come over you and strip your